Hello everyone. Now the second method, the income methods. First of all, the statement of income method. The income method measures national income from the side of payment made to the primary factor of production in the form of rent, wages, interest, and profit for their productive service in accounting year. It means the income which is we receive or the payment which made to the rent wages in the form of rent, wages, interest, and profit for their productive service in the accounting year. The total of this is called the income, and then by this process, if we calculate the national income, is called the income method. Means, in other words, we can say, according to this method, national income is the sum of factor income earned by normal residents of a country during an accounting year. It means under this method, the income which is earned by the factors only, mean land, labor, capital, and entrepreneur. These are the four factors by the normal residents of a country during an accounting year is called a national income or under by this methods. So some steps to calculate national income. The first step is to calculate the net domestic product at factor cost. First of all, in national in income methods, when we want to calculate national income, the first step is to calculate the net domestic product at a factor cost. To calculate this, first we need to identify the factors from where we receive income. The first step is your first factor is the compensation of employee. Compensation of employee means the compensation received by the employee. Employee and the employer both are the different entity. Employer is the person who provide job, but employee is the person who doing for work for the others. So employee get wages and salary. So the first component of compensation of employee, in that sometimes the part is given, sometimes directly compensation of employee is given. So in compensation, in form of compensation, employee receives wages and salaries, or in payment in kind. In kind means wages and salary received in cash, but in kind means sometimes the free food, free electricity, free educations, or maybe any type of payment in a kind. So that is also part of the compensation of an employee. It means from employee get benefited. So that type of payment is a compensation of an employee. The third is the employer contribution social security scheme. Sometimes the employer contribute in the social security schemes, mean some part of the income which is contributed by the employee and some part which is contributed by the employer. The employer contribution social security scheme is added. Yeah, it is a part of the compensation of employee. But employee contribution in social security scheme is already the part of salary, so that we will not add again. So employer contribution in social security schemes, that is part of the compensation of employee. And pension on retirement is also a part of compensation of employee. But old age pension is not a part of the compensation of employee because that they receive without doing any work. So here pension on retirement is part of the compensation of an employee. Plus operating surplus. Operating surplus have four components: rent, royalty, interest, profit. Rent is the reward of land. If we give land to for use to another people, so that we receive a rent. Royalty is also a type of rent which we receive for giving to our property to use to another people. Then the interest is reward of the capital, and then the profit. Profit is reward of the entrepreneur. In profit have again some part I distribute profit or dividend. Dividend is the part of profit which is divided, yeah, distributed to the partners. Corporate tax or profit tax which is paid to the government, and undistributed profit which is remain kept with the entrepreneur for receiving or retained earning. So these are the part of profit. Now the questions arise here. Sometime to calculate net domestic product factor cost, compensation of employees given, then directly we will add compensation of employee, not wages and salary, payment in kind, employer contribution, and pension or retirement, because already added in the compensation of employee. Compensation of employee is a broad form of these. But if compensation of employee is not given, then any part, one or two, three part is given, then all we will add. In the same way, operating surplus is given, then we will add operating surplus only, not rent, royalty, interest, profit. But if Rent is given, operating surplus is not given, rent given, royalty given, the interest given, then all we will add. In the same way, if profit is given, then we will add profit, but sometimes profit is not given. Distributed profit, dividend, corporate tax, profit tax, undistributed profit, corporate saving, retained earning is given. Any part of this is given, then we will add in a profit, because if profit is given, then directly we will take profit, not the other part, because these are the part of the profit. So profit is the main component, so we will take a profit. If profit is not given, then different part is given, so we will add all the part, or maybe the given part. Third is the mixed income of self-employed, which is not distributed, which cannot be segregated in the rent, interest, and profit. So that type of income is a mixed income. We will add all the three component of income, and the total is called a net domestic product at a factor cost. So to calculate national income, the first step is to calculate net domestic product at a factor cost. The second step is to calculate national income. So to calculate national income, we need a net factor income from abroad, because national income is the income which is earned by the normal residents of a country. So net factor income we need. So net factor income, how to calculate net factor income? Factor income from abroad minus factor income to abroad. The difference is called a net factor income from abroad. The income which is earned by the factor in the another country, rest of the world, that is called a factor income from abroad. The income earned by factors in our country by the foreigners, so that is called a factor income to abroad. It means the difference is called a net factor income from abroad. Or to calculate national income or net national product at factor cost, we need to add net factor income from abroad in the net domestic capital, net domestic product at a factor cost. So NDP at FC plus net factor income from abroad is equal to the national income. So in this way, we can calculate a national income. So by this diagram, I'm trying to show with the pictures. The compensation of employee, operating surplus, mixed income of self-employed is equal to the net domestic product at a factor cost. So if we will add all the three components, then we can calculate net domestic product at a factor cost. That it is also called a domestic income. Domestic income which is earned within a domestic territory of a country, maybe by the foreigners or maybe by the Indians. So if that income which is earned within a domestic territory of a country is called a net domestic product at factor cost. The income which is earned by the normal residents of a country during an accounting year is called a net national product at a market price, or net national income, or national income at factor cost. So this we can calculate NDP at FC, domestic income plus net factor income from abroad. So net factor income from abroad is the difference between factor income from abroad minus net factor income to abroad. If we will add this, then we will calculate a national income. So this I am trying to show with the help of pictures. Now some fact which you must remember to calculate national income by any methods. Like for first is the net plus depreciation is equal to gross. If any net value is given, if we will add depreciation in that, then the total is called a gross. If gross is given, if we will reduce depreciation, the remaining is a net. So it means the gross and net, the difference is a depreciation. If factor cost is given, if we will add net indirect tax, then that will become a market price. If market price is given, if we reduce net indirect tax, then the remaining become a factor cost. It means factor cost, the net indirect tax, the difference of between net factor cost and market price is the net indirect tax. Then net indirect tax is equal to indirect tax minus subsidy. The indirect, sometimes the indirect tax is given, subsidy is given. So that we will calculate difference between that. The remaining is a net indirect tax. Then the question arises domestic and national. The domestic plus net factor income from abroad is the national income, or national minus net factor income from abroad is the domestic. So it means if domestic is given, then we will add net factor income from abroad, then that become a nationals. Or if national is given, we need to calculate domestic. Then we will reduce net factor income from abroad. The remaining is a domestic. So in this way, we can calculate any concept. These are most important concept which you keep in mind. Now some precautions for income methods. First, income from illegal service like gambling, smuggling is not included in estimation of national income. Income from factor only will include not illegal services. Illegal services will be not included. Transfer income like gifts, scholarship, widow pensions, unemployment allowance, old age pension, charity, grant is not included because it is one-sided payment, one-sided income. So it will be not included. It not contribute to the national income. Income from sale of second-hand goods is not included. If we will purchase and sale of the second-hand goods, if we sell, then if we receive income, so that will be not included because it is already included in the national income. Income from sale of shares, bond, etc. are not included. It is only financial transaction, so it will be not included. Income from windfall gains, lottery is not included in national income because it is a transfer payment from one side to the second, so it will be not included. Imputed rent of self-occupied is included in estimation of national income. If we will self-occupied house, the value of imputed rent is will be included in the national income. In this way, the commission on the sale and purchase of the second-hand goods will be included, but the value of second-hand goods will be not included. Now, with the help of example, we try to calculate this. First component is given compensation of employee, mixed income of self-employed, net factor income from abroad. It is given in minus, rent 350, profit 600, consumption of fixed capital 200, net indirect tax 250, and interest 450, dividend 200. Now here profit is given, dividend is also given. So we will add only the profit, not a dividend. Wages is given. Here again that compensation of employee is given. Wages is also given. So compensation of wages is the part of compensation of employee. So we will take only the compensation of employee, not wages. So first step is to calculate net domestic product at factor cost compensation of employee plus operating surplus plus mixed income of self-employed. 800 is given compensation of employee, operating surplus is given 9, mixed income is given 900 and operating surplus is given 350, 600 plus 450 is equal to 1400. The total is 3100. It is net domestic product at a factor cost. Now we will calculate net national product at factor cost. Another word is national income. So NDP at FC is calculated already plus net factor income from abroad is given in negative. So 3100 plus minus 50. So 3050 is net national product at factor cost or national income. So in this way, we will calculate national income by income method. First step is to calculate NDP at FC. Then second is to net national product at a factor